Good evening, I'm Giuseppe Basile, I'm the analyst and trader. You can find at the website www.fibstalker.com. I also post regularly on Twitter using the FibsTalker nickname. Good evening, today is Sunday, August the 17th, 2014. It's 20 to 11 time in Toronto. And I'm going to review for you in this first video of the series of 3 videos I distribute to my newsletter subscribers. The first 4 markets I follow. These are the euro dollar, the SP500 E-mini, the dollar index futures, and the gold mini futures. So let's start from the euro versus the US dollar. I just want to say that if you're watching this video and you want to receive these videos, I'm going to send to my newsletter every weekend. Just subscribe to my newsletter. You go to www.fibstalker.com and I'm gonna send these videos to you. I also publish a midweek review on Wednesday to see whether you are on the right track with the setups that I give during the weekend. So let's start from the euro dollar here. You will remember that I've indicated this 133.80 areas as a potential area of support. Historically, these areas provide a support that actually has the potential to, in this specific case, to bring price right into the 136.60 area, and that's not impossible, and that's not even it's justified by the way this market moves. So if you think that this market should continue lower from this point, well, think better. That's not the way the euro dollar behaves. And I've indicated a very clear level here and a very clear event, so very simple to track, very simple to identify. 134.40 level is the level that I'm going to watch. Now, if the price gets into, I mean, we saw price reacting to this area 134, starting at 134.20 here, and this area is real. As you can see here, there was first participation on the downside, second participation, third and fourth participation. Actually, on Friday, last Friday, there was a reaction lower here. But clearly what we were seeing here is that this area at 133.80 is actually providing demand for this market. So if price will be able to pierce this 134.41, you can kiss goodbye shorts, at least for the temporary here, and there's a very high probability, 90% or more, that the market will get into this 136.60. Actually, I believe that the only reason why this market could not get to that level, if there is a fundamental reason for that, if the European Central Bank comes with additional measures in order to help the euro area. So I don't see this happening at the moment. Even if that happens, that could be an opportunity for program trading that is participating in this 133.80 area to bring price into 136.60. Always remember that program trading will do whatever it takes to bring prices to their targets, and then we'll simply reverse their position. So clearly here in this 136.60 there is a participation, there is program trading on the weekly time frame ready to pick this market and short it again. So that's the event we have to look at, 134.40. If that happens, this market is going to continue higher. Moving to the SP500, congratulations to those who took this signal and respected this area. I mentioned that the market could go down into this 1908. I haven't changed this levels as you can see since since this trace here, so since July the 24th. So that's the way I look at the market. As you can see, this area was provided with more than 2 weeks in advance here, between 1 and 2 weeks in advance, and the 1890 was never pierced on the downside. This is still a long, and we know that I already mentioned last week that the first target is going to be at this 2022, and this is an extension long, so it has also a target, this 2082. So if you are asking yourself where this market has the potential to go, that's where the market has the potential to go. If we get a retracement now and this market gets into the all the way halfway back into 1926, 25, that becomes an opportunity to buy this market. I don't believe we're gonna get that that opportunity. That would be great. I don't think this market is going to retrace to that level. But if that happens, I mean, that's the opportunity to trade. Moving to the dollar index, as you know, nothing to say on this market. I use this market only for confirmation sometimes, but the main idea here is that this market, it's an index, and 60% of this index is the euro currency. So actually, this market will always resemble the euro is doing. Apparently, at the moment, I just want to show you the setup that I've been trading in at the beginning of July here. I provided these setups well in advance, and when we saw price moving below 79.84 here, I mentioned that the market could actually enter this area again and then respect that area. And it's not that I have a crystal ball here, but we knew when we saw from the euro dollar that the pattern like that could actually develop, and that's what happened. And when this 80-10 level of support, starting of this area of support with a stop below 79.84, started actually supporting price, we saw that price was brought into this 81.60 level, and that it's where we started seeing some profit taking at the end of July, and then again at the beginning of August here, mid of August. So we saw on Friday that strong move lower. As I mentioned before, the euro dollar has not confirmed just yet, so there's no need to get involved in shorts at the moment in this market. If that happens, it's going to be to the price that corresponds to the break of the euro dollar on the upside, and I believe you're going to get that break this week. So that becomes an opportunity to trade the euro dollar long. Finally, gold. Gold is in this nonsense move up and down. It's actually breaking all the way halfway back short here, as we saw at the end of last week. 1321, 80, 90 was pierced on the upside, and after that there was a pierce of the all the way halfway back long. So a lot of indecision in this market, not a market where you could get involved, and there's a potential for this market still to retrace all the way into the lower edge of this large consolidation here. I'm showing these trend lines not because I trade them. I don't, as you know, I don't trade them. I don't believe in traditional technical analysis. I think that the current indication we can get from the observation, the effects of algorithms on price are much more precise and much more actionable. And we also have the benefit of price discovery when we use this method. So that's the way I go. That's the way I suggest you should go as well. But that's just my my view, my personal view. Now, there is still the possibility for this busted setup here, short to work and bring price eventually lower. But there is also the possibility for this 1302 to keep working. So really, there is not really a lot to do in this market, and it's better to look at other markets and trade other markets rather than trying to squeeze a position in this market. Of course, this market could just continue higher and start respecting this area 1302 and never pierce again the 97 here, 97.10, but that's not a good reason for taking a position long here. I would rather wait and see this market to retrace much lower, and then on a failure of the sequence of measure move lower, get involved long. So this is it for this first group of markets. Again, I want to repeat on the euro dollar. The signal is going to be price above 134.40, 41 here, and that's a confirmation of longs. And actually, if you're a swing trader, you can also take a long here with a stop below lows, and that could be, I mean, that is a three reward to risk trade, and there's a good possibility that you just have to wait for that trade to develop. And you can also check whether you can get a free risk trade when you consider this potential level of resistance 135.17, an area of resistance. And as you can see, there is a potential to get a free risk trade if we make a calculation there. So there's a very good opportunity for a long in the euro here. It's not going to be a change in the trend. That trend has not changed just yet. There is a possibility for a rally into 136.60 with a very high probability, 90% of probability. This is it for this first video. Thank you very much. If you want to receive this video, you know how to do that. Go to my website www.fibstalker.com and subscribe for free. I respect your privacy. I hate spamming. When I send emails, you have always a link where you can unsubscribe with a touch of a button, and I'm not going to bother you anymore. So subscribe confidently. I don't handle your emails. MailChimp does that, and there are very strict rules there, so no worries about that. Thank you very much, and have a great evening, and a great trading week this week. And if you have any questions, just send me an email. I read and respond personally to your all emails. So if you have any questions, let me know. Thank you very much, and bye bye now.